are we working towards? So I'm excited to welcome our panel on Web3 adoption, what does it take? And our moderator, Zach Seward, the CoinDesk contributing editor-at-large. They're coming out. Good. You guys are good. Here come.
Is this thing on? Are we on stage right now? Holy smokes. Hey, everybody. I'm on stage. I am the moderator of this lovely panel. We have some really good venture capital people on stage, and VC panels are super duper fun because these folks have a really great sort of ground level perspective on what's next. So we're going to try to save about, 5 or 7 minutes at the end for your questions. We'll circulate a microphone. We'll keep it fun. But just start thinking about good stuff as we get going here. My name is Zach. I am a contributing editor at CoinDesk. I do a little show called The Hash, where we talk about the day's news. It's super fun. And I do some other stuff as well. And that's my introduction, but I'm going to ask each of these people to briefly introduce themselves, where they're from, and what their fund, maybe a few prominent investments that your fund is known for, and then we'll kind of get a good context for who's on stage, and then we'll have a good time with it. So, Kavita, I kick it to you.
Thank you, Zach. You finally have a chair.
So nice.
Hey guys, my name is Kavita Gupta. Right now I'm a GP and founder of Delta Blockchain Fund. We are approximately 150 million AUM between our two funds. Before this, I started Consensus Ventures, Tachyon, and before that, I'm coming from a traditional World Bank IFC experience. Investments, I've been fortunate to be first checks into companies like Polygon, Quantstamp, Starkware, Coinbase, Sorare, OpenSea, among others.
What's up, everybody? Good to meet you. Thanks for having me here. My name is Anand. I've got a sort of a dual role. I run a small early-stage seed fund called Canonical. Some notable investments out of there have been Farcaster, Skip Protocol, which is actually started by, I think, Penn alums, Lava Network, amongst others. I'm also a venture partner at Lightspeed, a bigger fund, $7 billion under management. I'm involved in investments like Alchemy, Arbitrum, Off-Chain Labs, Miston Labs, among others. Yeah, so that's a little bit about me.
I totally disagree with everything. Hi, I'm David Packman. It's nice to see you. I'm a Penn alum. Go Quakers. I think everyone here is a Penn alum, isn't it true? I'm at CoinFund. We are a crypto native investing team. We've been around since 2015. We have a seed stage program where we write $1 to $2 million checks into companies. We have a venture fund, which is mostly Series A. Sometimes some Series B checks, sort of $6 to $10 million first check into companies. And we have a liquid fund that just trades crypto liquid tokens. We're playing in all parts of crypto, NFTs and protocols, decentralized resource networks, a lot of interoperability stuff right now. Some notable investments, Dapper Labs, I still sit on the board there, early into NFTs, Blockdaemon. Portfolio is about 150 companies. So nice to see you all. Thanks for having me.
I'm Nick. I work at General Catalyst. We're a large multi-stage firm. Our last fund was $4.5 billion. We do everything from $1 million seed checks to $100 million pre-IPO checks. Though I'll say we've been spending most of our time at the early stage over the last 2 years for a good reason. I would say some of our most well-known investments in crypto, we're the largest shareholders in Circle, led the seed of Audius, Runcello, CoinTracker, and a host of others. So yeah.
Cool. I'm Jared Matfis. I'm a partner at Tribe Capital. We have a general venture fund, about 1.5 billion AUM, and then we have a dedicated kind of earlier stage crypto vehicle that's a bit smaller than that, sit across both of them. Yeah, we're in a ton of companies. I don't really know which ones to say. I don't want to piss off any portfolio companies.
You have to say one, Jared. You have to say at least one by name.
recovery, they're super good.
That's his favorite child, everybody. All right, thank you. We have a really good perspective here because there's a lot of good corners of the crypto world represented. We're going to be talking ostensibly about Web3 adoption, but we're really going to cover it all because we got some smart people on stage. Let's get to it. All right, so my first question to you is, everyone is saying this is biddle season, right? This is sort of the euphemism for when the markets are a bit down. So if it is indeed biddle season, what are people biddling according to the decks that you're seeing? Nick, I'm going to put you on the spot for this one, assuming that you may see the widest range of pitches. Is there any sort of thematic focuses that are emerging in this cycle's biddle season?
Yeah, I think we're still seeing a lot of people focused on scalability, middleware, infrastructure. Thankfully, a lot less recursive things like, oh, I'm building the first AMM on name your alt L1. So thankfully, a lot less of that. So that's a large part of what we've been seeing. I guess I can talk about what I'd like to see, or we can hold off on that.
Yeah, go ahead. Go for it.
Yeah, I'd like to see more focus on applications, both B2B and B2C. I think there's plenty of infrastructure and scalability solutions out there, and we just need to get users on chain. And also looking for net new DeFi primitives, and have seen a few recently that are interesting, but obviously that's more challenging.
Got it. When you say new DeFi primitives,
Yeah.
like blow our minds, what could these primitives end up looking like?
Yeah, so I think one thing, so like over the last 12 months, there was just a lot of sort of building the same thing, right? I'm building the lending protocol on a new chain, but I think something that's been exciting now, right, is like the focus on real world assets. And so as we think about like how do we actually get 10 million people using things that are on chain, it's like expanding beyond just crypto, right? So I'm not interested in focus on the bridgers, but people who are enabling like an exchange for the trading of both Forex, right, commodities, blue chip crypto, and other things, and saying, hey, we'll be the exchange for this, and we'll enable cross-margin, composability, leverage, but we're not going to be the bridgers, right? Because I think their view is that there's no moat there, which I agree with. Asset managers or whoever would just do it themselves, and it's not technically challenging. But that's one thing that I'm super excited about, because hopefully, right, it'll bring commodity traders, Forex traders on chain and greater functionality, right? Like if you're just trading crypto, that's one thing, but if you open up the opportunity set to way more asset classes, that's super compelling.
Is that a new primitive, or is that just dropping different assets into existing on-chain primitives?
Yeah, so I think it's a combination of the two, right? So I think it is using existing, but the vision, right, is that as you build V2, V3, you're enabling something net new, right? So like using synthetics in V1 wouldn't be net new, but I would say ultimately what they're trying to build is very different than what others have been doing in the space.
But doesn't that already exist from a long time? Like most of new synthetics, not building just lending platforms, but actually using them as a collateral. A lot of different new tokens, even mixing them. Some
Yeah,
of
sure.
them I don't even know whether legal or...
You have synthetics, right,
Yeah.
that you can do this, but I think ultimately, right, it's about getting like centralized entities who are having collateralized assets, bringing those on chain, and then having that be the exchange. My understanding is that like synthetics isn't trying to do that, right? They only want to do synths, right? And so building, right, something that's on chain is very different than what exists today.
Okay.
David, I'm going to put you on the spot, both with what you're seeing and also that wish list in terms of, I think you put it well, sort of expanding the total addressable market for what crypto can accomplish and how it might drive a new wave of adoption. Both, what are you seeing and what's that wish list?
We're seeing tons of infrastructure, but I think that's appropriate because you have 300,000 people laid off from tech so far, probably on our way to 1 million. What areas are they going to be interested in? Pretty much AI, crypto, maybe a little bit of clean tech are the only like super new and interesting, compelling places in tech where you want to go like devote your future. And so if you're a Web2 developer and you're showing up and looking at the Web3 stack, even after 10 or 12 years, it's still super immature. We're still arguing about like where's the data layer, how do you access data, should it be on chain? We still don't have a convincing user story for onboarding. We still have MetaMask as a wallet where you have to scroll down to even find the action button that says confirm or sign, which no one knows what that means. So like we're still just dealing with like a super immature UX and stack. and Web3 developers or Web2 developers want to build here. So we're spending a lot of time on that. We're making decentralized databases, decentralized resource networks. We're trying to get AI present because you can't build a Web2 app without AI right now, but we don't really have like compelling Web3 AI-based software development. So we're still playing catch up. That's good. Like we should do that because you're not going to build apps as rich as Web2 without that. However, I think what the wish list is we all want to see compelling use cases. And I think I'll cause some disagreement in that, I spend most of our time, honestly, looking at consumer use cases because the history of tech is that consumers almost always adopt technology first before institutions or enterprises.
Criminals usually.
Yeah, true porn, criminals, and gaming, right? And a lot of that, 2 out of 3 in crypto, right? So I think what we're waiting to see is like more Gen Z, crypto native adoption, majority of NFT adoption, which we got to $40 billion in NFT sales in 2.5 years. It's the most successful new consumer product since the smartphone. Now it's all crashed. It's down 80 or 90%, but so is everything else. So I guess we want to see more, I would say, young digital native user adoption.
So with the NFT sales, one of the things I spend a lot of time thinking about is like net spender use cases. You go to a restaurant, you give them money, they give you food, you leave with a lower liquid net worth, but there's some esoteric exchange of value for goods and services. With a lot of NFT sales, you're not spending, you're investing, right? If the liquid market value of the NFT you bought or minted is lower than the price you paid, you're going to be really upset. Do you see the market for like actually spending on NFTs expanding in the same way that speculating on NFTs?
So like, if we equate them largely to collectibles, which is what I think we hope they become, then we know there's like 7 different reasons why people collect. Like there's actually a Penn professor who wrote a book on like the psychology of collecting. One of them is for the belief that it's going to increase in value over time. It's not the only reason people collect. Some people like do it to like bring order to the world or to express a love of a product or service or identity, or so all this. But so I don't think we have to have a market that only goes up in order for like NFTs to be an interesting market. It helped a lot. But there have to be other compelling reasons to own an NFT. And one of the things that's been so disappointing to me about NFTs is that it's software. These things can change and improve and become more rare and become more interesting and adapt to the personality of the owner, and they're not really doing that right now, right? They're sort of super static, or maybe there's a little bit of image movement in it, but they don't take on new attributes over time. Physical collectibles don't take on new attributes either, except maybe aging, but digital ones can, and so I guess I'm expecting them to have a different set of attributes to make them more interesting beyond just like, please only go up.
Kavita, I want to get you on the board here. You've seen a few crypto cycles, and oftentimes it's sort of the same story, right? We're not there yet. We're not there yet. We need these new dynamic use cases. I guess the question would be, like, from a wish list perspective, what's your hunch as to what might actually level up crypto next time around?
Yeah, I think I am actually still going to stick to we are not ready because everything what I have heard so far, first of all, that's from a very Web2 perspective. That what do we need for a massive retail consumer adoption as a user? I go back to the deep Web3 requirement. We don't have a good indexing. And we don't have, based on indexing, a meta tags to have, there is no search engine for Web3. And when we are talking about NFTs and we are talking about billion-dollar markets, just as an example, you can't even search on Google or on OpenSea or any of the platform, just say, hey, ducks, and like there are a bunch of amazing NFTs which really don't have ducks in them, but they are like listed under somehow. We don't even have basic infrastructure there, and that's the wish list. Yes, we have graphs of the world, covalent of the world, but creating your own subgraphs, running your own node, and then creating your search results out of it or indexing data to then build developers' adoption data is not something which is going to get users into it. So we have been spending a lot of time incubating and also really going out hackathon to hackathon to put together usable billion people adoption indexing data, meta tags around it, then how does the search and the engine works around that, and then going back and using AI, which was mentioned here, that yes, you cannot build, but using AI into blockchain, I don't see that Web2 influence on Web3. That's just the technology which has to go through the base level to make it adopted very fast. That's how I look at it.
Anand, I want to get your thoughts on that.
Yeah, I'd say that I think there's a lot of focus on trying to get consumers to use crypto, right? I think for me, I'm just thinking about how do we get the next 100,000 developers to be building things on chain, right? And that would be a good starting point. And a lot of that comes with infrastructure. So for me, I think someone said this really well or eloquently back in the day, which is we go through waves of technology innovation, right? I think they said, the first airplane was created, there was no airports, right? And then airports came up, and then airplanes got bigger, then airports got bigger. And so well, first of all, let me back up and admit that I've got a bit of bias here. Like I come from, I used to be a developer myself, and so I have a little bit of bias in sort of what I see, and my wish list is also sort of centered around wanting to see things that are infrastructure focused or where the end user is a developer. And so that's the stuff I see is from a wish list perspective. I think just like some of the things you were mentioning around like MetaMask and some of the obscurity there, I just wanted to call out, if you folks have been following like what Farcaster has been doing or like what the Eng team, there has been doing, I feel like they've been putting out a little bit of a master class on how to obfuscate all these sort of weird intricacies that exist in our world and the things that we take for granted. Everything from we've been talking about account abstraction and the actual manifestation of that. They've actually already got that implemented, whether it's actually storing data off chain and leveraging it without actually having to store casts. Actually every one of these modules, and the reason I bring this up is because I think every one of these modules can be a company in and of itself. So there's things like that I feel like if you wanted to get ideas on things to build, watch what they're doing because I think they could easily productize that and make companies out of it. And some of them are products and companies, and there's probably a lot more to come. So for me, it's everything centered around wanting to build for developers, I feel like, or making them more productive for building things on chain. That's in my wish list.
Kind of want to stay there. We're going to touch a couple of topics, but I want to talk about sort of developer onboarding. I'm glad you brought that up. You look at like Electric Capital does its annual report about where people are building stuff and why. Do you think sort of developer onboarding in crypto is broken? Are there ways to improve that? How do you sort of level up and get to that next, as you put it, 100,000 developers rather than the next billion users per se?
Yeah, I think there's two ways to look at it. One of which is, I think David again touched on this, which is, I think we've kind of gone through this cycle, right? Like when you want to build something, the barrier for entry right now is fairly low actually. So it is easy to get up and get running, but I think the rigor that existing Web2 developers sort of bring to the table, right? Like there's a team that I'm working with right now. They're super early, but they're ex-Facebook engineers. And they have dealt with petabytes of data, right? Like that's, and then trying to bring that level of scale, rigor, product development from an organization like Facebook and bring that to build products on chain. Like I'm excited to see that because I think a lot of it today has been somewhat patchwork. There are some really good products already, but I think, just bringing experience to building things in Web3, I think is going to be one of the first things that I think will help other developers just get onboarded, right? So I think that's been sort of missing, and maybe this is the wave, right? There's an interesting sort of confluence of things happening here with layoffs, with social networks breaking down, with other sort of signals that are sort of happening. So I think hopefully, I'm kind of indirectly answering your question by saying that I think just a new wave of folks coming into this world, I think will just elevate the developer experience overall. But yeah, I think even to what Kavita was saying earlier, there are some things that are fundamentally broken, just, that were sort of built for the, maybe the 2017 to 2021 vintage. We kind of got that out there and it's working and it's somewhat patchwork, but I think we're going to see V-necks of those come in that I think are going to be quite elegant.
I'm going to counter, very quickly something. I think this idea, usually in the Valley, where like a lot of Google, Facebook people come into the space, and 99.9%, the first complaint is, we are used to like terabyte of data. How is this going to work? Like that's the first lunch conversation every time in the Valley. And then by the time, if they stick around, by the time you get to the third lunch, they have basically ran their own node. They have all the data downloaded there. They have figured out the scalability solutions. The reason I'm saying is we are dealing with 3 of the companies. We are like putting the first check in and like went through their journey, all ex-Google people. And I realized one thing with that experience and a lot of hackathon experience is, issues having developers in the space was a 2017-18 problem. I don't see that problem, at least from our side, in today's time. In fact, you have so many amazing DAOs and places like Builder Tribes are happening, Y Combinator is doing schools and all those things, that we have fragmented developers across multiple L1s, multiple L2s, and now the courses are coming for them to put together, to the extent that there is a company which you probably would know, Turing, which is like resource hiring, multi-billion-dollar company used by Google and everyone. They have started doing the same credibility of courses and then ranking of developers' skill set for companies like Coinbase and all. So at least in my personal opinion, I think developers' talent is no more a problem in the space.
Yeah, I like your.
We would love to have more, like not that like there shouldn't be more.
I like the question you're asking. Is that working? No. I like the question you're asking, what will catalyze the next 100,000? It's a good question. But I do think we have a lot of developers here, if we have 30,000 active contributors to GitHub, are there, a couple 100,000 people involved in teams building apps and infrastructure and crypto? That's enough to kind of, it was enough to get to $3 trillion of value in the most recent wave. So I feel like what we're missing is some maturity in the technology to allow the application experiences that consumers have come to expect. I also think we're in a very weird moment in tech. I mean, not to get too high level, but what is the most exciting thing in tech right now? Like global tech, it's like people have been dying to talk about something interesting in tech, and it's ChatGPT, right? Like that's the only thing people can talk about. But other than that, there's nothing to talk about in tech. That's like M2 chips. Or like the most exciting thing on your phone or your desktop is probably like a new desktop productivity app. I'm talking about not crypto.
I got some head waggles down here, Jared. Get that man a mic.
People want a new story.
We have a positive sum, like fusion reaction, like nuclear fusion's like around the corner. That's pretty interesting.
Around the corner. Okay, can I hold you to the around the corner?
Nobody's talking about them on Twitter.
Yeah, I'm talking about software.
We're looking at nuclear fusion.
Wow. Okay. Wait.
That's how
I think we're
between. I think
Wait a
we're
minute.
between
Wait a
a
minute.
period.
Wait a minute. This might be an inflection moment, right? So like, are crypto VCs gonna exit for more interesting stuff?
No, I think crypto is
hearing?
the most interesting thing.
You think this is the most interesting?
No, this is definitely the most interesting thing.
Sure.
And I think
more than fusion power. More than fusion.
well, fusion is I think it'll get there, right? But I think we talked about developers.
I think you need a different degree to do diligence for that. I'm not capable.
Believe me, I'm not the one doing the diligence. But I think we talked about consumers and developers. Something that really gets me excited is about enterprises, like traditional enterprises that are using things on chain, right? So we're not quite there yet, but if you look at emerging economies, a lot of people are saving in USDC, and it's effectively becoming their neobank. Whether you go to Argentina or Colombia, it's meaningful adoption that's happening there. But there's also traditional businesses like Visa or MasterCard that have a vested interest in starting to use USDC today. Because the way that the payment flow works is you have consumers who pay merchants, and then of whatever merchants are selling, they're paying 120 to 300 bips in fees effectively, right? And so where's that coming from? It's coming from payment gateways, acquiring banks, card networks like Visa, MasterCard, and then the merchant bank. But if you are using USDC, you can sort of get rid of the payment gateways and the acquiring bank, which is like 60 bips of that transaction. Visa or MasterCard, who's really taking 30 basis points net, could up it 15 basis points, make 50% more on every transaction, and give 15 basis points back to the merchant. So it's a win-win, and there's a vested interest for them to start using this more, right? And that's why you see Visa starting to, talk to Circle or whoever, right, about doing this, because there's a vested interest not just in payments, but in traditional enterprises, right, to use some of this technology. And I think that's how you really get 100 million people to be using this stuff. It's not by rebuilding up every single company or industry on chain. It's actually from getting traditional players involved, right? And I think we need to do a much better job of that. But it is happening, and you're not hearing as much about it in the press.
So when you go to these, enterprise businesses, is that the pitch that's like landing on receptive ears, right? Hey, there's cost savings or additional revenue opportunities for the efficiencies that are presented by some of these on-chain technologies. Is that like the pitch that's working, or is that not working yet?
It depends who it is, right? And it depends who you have at at organizations, right? Either they're receptive and like sort of crypto curious, or they just dismiss it out of hand. But like for an example, right? If you can improve like your margin structure at Walmart, like that's tens of billions of dollars, right? Because they have such thin margins anyway, so they are looking at stuff like this very seriously, and will probably make inroads here, would be my guess, over the coming years. So,
Supply chain, Walmart blockchain supply chain for their shipping and ports has been happening since 18.
yeah, but that's not
Yeah.
payments. That's not payments, that's totally different, right? That's logistics, yeah. Although the supply chain is a whole nother story. I don't know if blockchain needs to solve that, but it does need to get solved.
There's like almost zero need for any of that in supply chain. Basically, like the only reason you should ever have crypto in any system is there a process that was formerly like handled by a centralized alternative that you want to decentralize via financial incentives, right? And supply chain stuff, you're always going to need the physical inputs. Maybe you want to argue that, well, you can do like SGX level security at the device level, but then like devices can get stolen, so then you need some type of governance process. Like it's all a mess and doesn't really need to be crypto-fast.
Actually, on the shipping, there is like the whole settlement part of like whenever you have to actually go through a contract, if some big ships has arrived and you have said yes, then the money should basically settle within 3 days. So using smart contracts for those shipping yards have been happening successfully on blockchain across the world today. Like 18 ports are something which my last company Consensus already supported. And so what we see actually actively, including India, Scotland, a lot of shipping yards in Africa, and now they have made a rule for a lot of transportation with British, I forgot the name of the whole shipping port, that if all the smart contract for settlement of money, like as soon as they put the physical note that yes, the parcel have really reached the port and the goods are in a good service or health or whatever, the smart contract takes on the lead and sells the money between the banks in 2 days. So a lot of those and like various different versions of it has been happening in a big way.
Yeah, that's right. It's like improving settlement times and reducing transaction costs are the two big things, right? And this is why the DTCC is looking...
Also adding trust layer to it.
Yeah, and this is why the DTCC is looking at blockchain, right? Because why is everything in the financial system still like T+2 to T+10 and costs so much money, right? And so enabling micropayments is another thing, but faster settlement, like for like traditional markets like equity, fixed income, all of this actually can be improved by using blockchain technologies.
Gotcha. So I'm hearing some innovation in the payments realm, which is exciting because I feel like payments is often overlooked sometimes.
Huge market.
I want to go to like sort of the VC high-level alpha section of this conversation. If you look to like the last bull run, I guess you could argue that sort of like the alt L1 thesis was maybe the hit of the mania that we saw most recently. In terms of sort of thematics that you're seeing emerge, David, I'm going to put you on the spot here first. What do you think are likely to be those next big themes that define the next bull run, should we get one?
I think if we believe in a multi-chain world, we do, you need safe, secure ways to move assets across chains. So there has to be some winners in interoperability. There's some thesis around, or some disagreement here about whether this will be a high margin layer, about whether it's a safe enough layer, about how much value will accrue. We have mixed views on this. I don't have high certainty on anything, but there has to be interoperable technology that makes it easy for developers and ultimately users to move both assets and messages cross-chain. So none of that's played out yet. I think that's practical. I would say that the financialization of NFTs. So we have extremely high conviction that we'll have a lot of intellectual property sold in the form of NFTs over the next decade. But those NFTs will probably be bundled together, be fractionalized, be turned into buying power, allowed to take loans against it. So the DeFiization or financialization of NFTs feels to us like inevitable and probably part of the next wave. So there's two.
Got it. I want to go back to the interop thing. Does anyone have any strong opinions as to whether or not value will accrue to these various sort of universal bridging layers, whether it's I don't know, layer 0 or name your favored one. Does anyone feel strongly that there's a strong investment case for some of those projects?
Is there a
'Cause I don't
reason you're
necessarily
going to
see
layer
it.
0?
What's that?
Is there a reason you're going to layer 0?
No, I'm just naming the one that's like in the news for all the drama and like wormhole, blah, blah, blah. We can get to the news section of this conversation later, but for now we're in the VC alpha section. So do you have a strong opinion on interoperability and where VCs fit in that picture?
Yeah, I don't think there will be that much value that accrues to the bridges.
Anyone want to take the opposite of that?
I think cross-chain analytics, reporting, and monitoring tools are going to be a next billion-dollar market because you may not use different L1s or different L2s like bridging around, but I feel like there will be an execution layer or sector-specific application layer, and then at the back end, people can use multiple chains just to have different reasons. And that cross-chain analytics reporting tools, whomsoever crack it, because I don't see it right now in the market, which is one place. And we have been looking for it from a long time. Whomsoever cracks it in a way that doesn't add another token to it would be a big winner.
Yeah, I mean, I'll just throw a bunch of random sectors that people should probably be paying attention to. Physical infrastructure networks, there's a lot of really cool stuff happening in decentralized wireless, mobile network operators that are coming together. If anyone saw like Helium launch their MVNO, it's kind of fake, honestly, because almost none of the network is running over their routers. It's mostly just on T-Mobile's infra. But theoretically, if they can get the concentration of routers up, then more of the network can kind of run through them. There's a bunch of companies that are going about it, not a data-first angle, but a mobile-first angle that'll probably get a certain amount of traction selling directly to carriers instead of trying to go direct to consumers. There will be some company that innovates in some way at the energy grid layer. There's huge issues there around hardware security and how you actually validate where energy is and how much is moving around. But someone will solve some of those problems, and energy grid management will be big. In terms of trading cycles, in the next few months, you'll see liquid staking derivatives go crazy post-Shanghai. Eigenlayer will come to market, which is a restaking primitive. If anyone was around during DeFi summer, you'll see.
Will it?
Yeah, for sure. Eventually, but like post.
Yeah, if they have the product.
I don't know, like they'll do it, or someone else will beat them to the punch. But like you'll see a world where people are cycling between whichever liquid staking derivative is kicking off the highest incentive rewards, and then maybe restaking as well. And there'll probably be a lot of mania there, and I have no idea what equilibrium looks like there. Like tons of things like don't make any sense in crypto right now. Like Uniswap v3 makes literally no sense. Every single liquidity provider across every cohort loses money, yet people still do it. The USDC, USDT pool, it's a 1%, it's a 1-bit pool. You make 20 bips on a yearly basis, taking long tail tether risk, and like losing out on opportunity cost of like, you could put that in AVA, you could put that in Compound, you could put that in T-bills. So maybe there's some conspiracy to secretly compensate people for providing liquidity in Uniswap, because like I have no idea what's happening. But you'll probably see a lot of innovation around on-chain dexes to a certain extent. Maybe if that's central limit order books on modular stacks that settle to Ethereum. If you believe in like a modular thesis or over on layer 2s, those are a few narratives to pay attention to. There's a lot of shit. It's all fun.
One big one which we missed: identity.
Yeah, identity is super important, especially, you guys go to UPenn when you graduate. Way to verify credentials is going to be really important. And theoretically, there'll be different types of credentials moving away from theoretical institutions. But yeah, that'll be a really important thing going forward.
Okay, so that's a lot of stuff that could work, and we also have the stuff that just doesn't make any sense right now. Does anyone want to take a stab at what is making the most sense in crypto right now, here in 2023? What are the things that are actually making sense for why crypto should continue to exist?
Stablecoins.
Sorry.
Stablecoins and ETH staking. Sorry, you get the one that doesn't work. Okay. Just looking at what is happening now, we've got 26.4 million ETH staked, like something like 16% of all ETH staked in contracts that are paying about 5% in a world where you could get 4%, and yet from T-bills. And so, like, there's high conviction that that's a good place to put your ETH. So that's real data from today. And stablecoins.
Just quickly on the stablecoins point, there was $8 trillion in volume settled last year. Like that's 10% of ACH and 1% of FedWire. And like USDC came out 3 years ago, right? Tether's been around for a little bit longer. That's insane.
Like maybe like $500 or $600 billion per month of actual transfer volume. So like those are real numbers.
Yeah, like-
That's in the bottom of the market, right?
But let me take a very crypto native controversial approach to that.
Yeah.
Stablecoins have always been a compromise for crypto native people and not a crypto evolution. Yes, most of the volume goes to stablecoin because ultimately it's just an easy way out with the government to work with and get your money back to the bank account. But I don't think when we are talking about blockchain and crypto, the most evolution or practical solution is stablecoin for me, at least. I think the adoption of...
The question is like, what are people doing today? Like, where is it today? Like, it is a big market today.
Yeah, I think, no, I'm not questioning about
I
whether
agree.
it's a
I
big
think
market
you're
or
saying
not, but if the question
Yeah.
is like what is going to stay or what is practically there as a product, I don't think stablecoin as a product. I think I'll more go towards what's happening today, which is going to have a big product build in the future, would be, as David mentioned, NFT FI space. I think that's going to be a big proponent of the next big cycle for blockchain. There is going to be a different evolution of DeFi just from what we have today. But again, going back to, I think a global identity can completely change the adoption on the blockchain layer.
Well, I was USDC stuff works great. It's the only NetSpender use case. Going back to NetSpenders earlier today, like people spending ETH fees or fees on whatever network to send stablecoins is like literally the only NetSpender use case outside of like I buy an ENS domain to not speculate on it.
Yeah, to respond to your question, I think hopefully we get to this point where we sort of delineate or maybe decouple sort of price action from innovation, right? I think we've always been like, oh, we're in a bear cycle now, so I guess what's the next thing that's going to come up that's going to pump up the price, right? And I simply wanted to point out that I think maybe all of us here have touched on it, which is DeFi. Like DeFi has shown product market fit. It's a solid suite. It works well. And going back to your previous questions, I hope we get to the point of it making a material impact for either NFTs, real world utility. The DeFi suite and stack just works effectively well. And I hope it starts to see more broader option.
So going to what Nick said earlier, right? If you ask people like, does Uniswap create value? Ask a layman. Maybe they pause for a moment. They think about it. Ultimately, they'll maybe come say yes. Maybe they'll say no. But if you ask someone like, hey, does the New York Stock Exchange create value? Generally, people are immediately like, yes, of course. Well, price discovery is deeply important and creates value for society. So, the question is like, why is there hesitancy for some around Uniswap if it creates value? And ultimately, it comes down to like, the assets that are traded there are primarily non-productive. So as more productive or utility-based assets move into DeFi systems, theoretically, things will just absolutely explode. So maybe that's real-world assets, maybe certain types of virtual assets. But what's important is generalized infrastructure. If you can create a system to value or set what borrow rates should be against a punk, well, you can actually drop some land in that. And if there's an appraisal process, things should be inherently compatible. And if you can set these systems up to be permissionless and incentive compatible by default, all of a sudden, like you're re-architecting the global economy. And I guess that's what gets me really excited.
Yeah, and DeFi is like still only a few years old. Like there's so much to be improved upon. Like there was no credit risk infrastructure over the last cycle, right? And that's getting built now so that you don't have to have a super capital inefficient system that it is today, right? So I think this is just the beginning, and yeah, it might have found product market fit, but like it's the most exciting stuff I think is yet to come. So
I think I lost my timekeeper, so I'm not sure how much longer we have, but I do want to give y'all a warning. If you have any questions, we might be turning to you soon. So start thinking of that stuff. Okay, quick little news section. I think like the DeFi conversation segues nicely into this, right? So I think in the news, like relating to DeFi governance, there's this big Uniswap brouhaha where A16Z was involved in a controversial vote that seemingly supported one of its portfolio companies over another competing company. This was a bridging solution. We don't have to get into the particulars of it, but it did sort of, I think, stoke a conversation that may be relevant to you guys as VCs, potentially participating in DeFi governance, potentially participating in what ostensibly are public goods for the benefit of the entire crypto economy. Does anyone have any thoughts on the recent sort of A16Z kerfuffle or lessons learned about how to best participate in governance so that it's not just a whales game?
Yeah, I mean, like most governance is just like a scam primarily. I think that the industry will probably move away from atomic governance You already are seeing like pretty efficient bribery marketplaces. So, if there's any protocol that allows you to influence emissions gauges with protocol governance votes atomically, like those get gained immediately. And as you're able to kind of separate economic rights from governance rights, the efficiency of those things will absolutely break a lot of governance systems. In terms of like if large VCs that have huge positions should be voting their bags or influencing people that are delegating to them, I don't have like extremely strong opinions there, except you probably want more groups saying something, or you want to be able to empower certain folks. But yeah, I mean the whole wormhole layer 0 situation is a mess. Both their products are like pretty comparable. Maybe protocols shouldn't be enshrining dedicated bridge partners or something like that, but.
I think it's a DAO governance model, which I think is very broken today, especially as a VC. Because if I wear my VC hat, I'm investing in a project where I have no idea of who are these people who are going to vote for the product direction for that particular company. Are they actually qualified to do that? Are there no biases around it? So until and unless there's a reputation built DAO governance with credibility, transparent credibility attached to it, I don't think we should be doing DAO voting for the project. And as an investor, apart from 2 projects whom we knew very well and we basically asked for their governance token holders, anybody above 0.05% holding, we haven't invested in any of the projects.
Yeah, I think at the end of the day, it's like a conflict of issue question, but like this isn't just a crypto governance question. This is very much an issue in the equity markets as well, right? So with the proliferation of index funds and ETFs, now if you look like at the top 3 shareholders of every company, it's like Vanguard, BlackRock, and like name your index provider, right? And they basically are voting on behalf of whatever Larry Fink or whomever wants to do with these organizations, and they have outsized influence, even though they're not the ones really with like the assets, right? And so like governance is an issue not just in crypto, but also in traditional markets. And I think crypto, at least, there's faster innovation on it, and that's not really happening in traditional equity markets.
Yeah, may I? Of course. Only 2 things. One, I don't think any of us are surprised that people are voting in their economic self-interest. The issue might be that we had this ICO opportunity that got totally bagged and shut down. And so the only way to accumulate the only people who can accumulate large positions in most protocols and projects are institutional investors who do so in the private markets before these things become liquid. And so they have the bags. And so they vote in their interest. And I think that's really what we're observing.
All right, so we have about 5 minutes left. Are there any burning questions in the audience? I see, is this a question? Is this a hand up for a question? All right, here we go. Shout it out. I don't know if we have mics to go around, so just shout it out.
Hey there. Web3 adoption, I think that's a really interesting question. I'm a student in the arts, and people hate crypto. What is something interesting that you see happening in crypto that is bridging the state of the art to the state of art?
Yeah, I mean, maybe this is not exactly an answer to your question. People hate crypto in a lot of online circles. If you ever watch like a Twitch influencer mention crypto on stream, the chat just goes absolutely fucking berserk. So I think you'll probably just see like a large rebranding. Reddit has their NFTs and their digital collectibles, and they sell 3 million of them, and people don't really make a big deal about it. In the same way that the original iPod wasn't like, oh, this much memory, yada yada. Steve Jobs was like 1,000 songs in your pocket. So I think increasingly we'll see things moving away from talking about the technology and just focusing on like actual use cases and implementation.
Thank you for that question. That was a really good question. Are there any other questions? I see 2 questions. We're going to get to both of them. Way in the back, shout it out. Thank you.
So with the emergence of like Web3 social applications like Lens and some of the other, what are you guys' thoughts as far as how it relates to adoption?
So we're involved in Lens. The way that I sort of view it is very similar to consumer social. You basically had one really incredible consumer social company that was created every year, whether it was Facebook, Instagram, Snapchat, TikTok. And the way that we sort of view it is we don't know who's going to build the best consumer social application in Web3, but we're going to invest on the platform, which like would be Lens, and like find the ability to attract developers is sort of how you win here. I don't know if you would if you have a different perspective, given your guys' involvement in Farcaster, but I think the answer is like, we don't know yet, and it's tough to predict. Consumer is a really hard category.
But I think I'll go back to, and maybe I'm just like beating the same thing. It goes back to identity layer. I think any consumer product, especially on the social media side, will go back to identity layer. So we have been investing into a lot of different identity products, especially like Eigentrust right now, to literally see which one is going to be able to power any of the social media platform. And I think whichever social media platform figure out a universal ID will take over.
Yeah, just contrarian view might be the most exciting thing happening in social right now, and it's not that big, is the federated model of Mastodon, where they've grown 24x in 2 months. It's only a couple million users, but it's a lot more users than crypto right now. And it's an interesting experiment around some federated, not fully decentralized, but not centralized social experiment. So I'm watching it closely.
Yeah, and the federated models are super interesting. You actually saw a lot of like torrenting networks implement similar processes in terms of scaling with like trusted users and striking trees down and things like that were able to stay online. So the graph aspect versus the actual like network aspect, where it's like, oh, if you can have a graph, maybe actually it's not so much a dominant network and more being able to port the graph between environments.
I'll just tack on one more thing, because these folks have done a great job of sort of enumerating all the things that will work. I'd say that I think a framework to employ here would be, if you're trying to sort of compete with an existing or incumbent system, right? Like, let's just create a better X, better Twitter, better Facebook. That's a really difficult proposition, because I think we see this with existing networks where people are just cross-posting, right? And you're trying to sort of like bootstrap this network, but it doesn't feel natural. Like the flywheel isn't quite there. So I say there's got to be some use case that stands out that makes these things sort of break out right now. And I feel like, I use Lens, I use Farcaster, I use Nostr, Mastodon, and I feel like it is a little bit of an empty room problem right now, because the impetus to sort of move from one of the existing networks is just not strong enough, right? So I'd say that's kind of the phase we're in. I think the technology is solid. I feel like we've got the airport before the airplane now.
Nice. Thank you for that question. Great question. Last one was up here in this area. Go for it. We got time for one more.
Given the recent crackdown of centralized staking service providers, does that make you more bullish on LSDs over the coming months, especially post-Shanghai?
Yeah, I mean, it has to, right? Like, the price has already reacted a little bit. If you look today, Lido, Rocket Pool, and Frax and Stakewise, I believe, are all up. But yeah, the action from the SEC is extremely important, and I don't know who's in the audience, so I'm going to hold my tongue. But expect to see reverberations of that over the next while, and I'd be super curious to see if any exchanges end up partnering with any liquid staking derivative protocols going forward or something like that.
I think decentralized staking has definitely picked up. The prices for like SSV and bunch of other portfolio companies like went up on that space. But also other thing which we were talking backstage is geographical regulations will also define what really happens, because SEC has come up with banning something which has not directly staking, but there's multiple layers to it. So until and unless we have a clear direction, there is a gray area now. So does that mean people who are doing the very similar institution staking in Europe or Dubai or Asia, do they actually get the benefit of doing it for all the US players, or they actually slowly, those geographies also start banning? I think that's what I'm looking at. So either the decentralized staking will pick up or geographical location will pick up.
Well, that was a really great panel. Thank you for doing that. We're going to wrap it there. Join me in thanking our panelists for their insight and time. And we wish you have a good day, and go Birds. All right.